Well, good morning, John. It's good to see you. We're recording this on Thursday morning. We're in the middle of reporting season, so we'll start off with just a quick reflection on the differences between the US reporting season, which is largely complete, and the Australian one, which we've seen to date. Both share markets are within 2% of all-time highs, but where the US market has had quite a stellar reporting season, analysts were expecting consensus earnings growth of around 5%. It seems to have delivered about 12%, and the big tech companies have certainly delivered. Here in Australia, it's been rather brutal. And I can think of two big stocks which have had massive sell-offs, James Hardie and CSL. John, what do you make of it all?
Well, James Hardie's in a world of pain. I mean, after what they did to Australian shareholders and left the country, and presumably it looks like they haven't kept the market informed about a downgrade, but that's something for the regulators to look at and shareholders to complain about. CSL is really a longer term story, and the market on getting the results said the long-term trajectory is not as strong as previously thought. I suspect the market is oversold. I suspect that stock will bounce, but probably not back to highs we've seen recently. But this is what happens. You've got a massive trading market. I keep on talking about this. You know, day trading, hedge funds, shorting, lending of stock, and we expect the equity market and the participants to, on a dime and within a minute, to work out what a stock's worth. It's totally ridiculous. But that's what makes the world go round, and it makes the ASX happy because more volume, more revenue for them, and they like all this price volatility. So apart from that, I think the reporting season's been okay. I think nothing really wrong outside a couple of small issues, and the underlying comments are reasonably okay. I think the consumer activity in Australia has returned. I think there's evidence of that in our retailers, off the bottom, so to speak. And meanwhile, we've got a productivity discussion going on in Canberra, and they can't seem to define what productivity is. But that's another issue.
Well, that's obviously a huge talking point. I think today's the third day of the roundtable. It was originally called a productivity roundtable. Now they seem to have dropped that, and it's an economic reform roundtable. Is there anything coming out of that you've heard apart from this kind of associated budget repair job of pulling autism cases out of the NDIS?
Look, the budget, when you look at it in very bland terms, there was a cost overrun in NDIS, which you and I have talked about relentlessly, and it's been obvious from the budget papers. So a bit of rectification work there. I'd suspect the illegalities going on and the false claiming going on in NDIS is probably where more money is going to be taken. But what they've done is taken the child issues away from it and put it into a separate funding vehicle. That makes sense, where it can be better managed for longer term healthcare of our next generation. But there's clearly rorting going on inside, and that needs to be fixed. And that could be many, many billions of dollars. The other issue is the unfunded superannuation liabilities, and I keep on coming back to it. And don't expect the people sitting at the round table to talk about superannuation because they're all on massive payouts themselves, particularly the bureaucrats and the politicians. And it is farcical. There's tens of billions of dollars going through the budget in pension payments for defined benefits. We have a future fund which doesn't pay pensions. And the rectification of the budget short term is a fairly easy fix, despite all the nonsense going on. What is the big issue in Australia is housing, affordability, supply, excessive demand caused by immigration, poor utilisation of immigration for the proper needs of the economy in terms of specific builders, plumbers, engineers. That's what the issues are around productivity. But having said that, the more expensive you make living, the more that wages will chase the cost of living. And people say, if I can't get a fair wage, I'm not going to work as hard. It's actually, in some respects, it's actually counterproductivity because of the way we run the economy. But That's not being talked about. And what we had is, we know the ACT is saying we need to work less. That was their first genius idea. No, that
No.
was floated for about a day, and
Yeah.
no one's talking about it because it was so stupid. But I'm a bit dismayed about what I'm hearing. We've got a commentary now about housing investment by super funds. And they go, really? Is that the best they can come up with? And talking about some rules regarding fee disclosures as being an impediment to investing in housing. I don't think anyone understands what they're talking about.
John, you sound reasonably relaxed about the reporting season. I want to come back to that because, these markets are on incredible multiples, and it's okay if they're delivering the growth. And in the US, okay, the market's on 23 times or whatever it is, but the leading companies are delivering fantastic growth. Here in Australia, there's very, very little growth, and between the banks, which are perhaps growing at 4 or 5 or 6%, barely above inflation, the real winners in perhaps like the technology space go offshore. I'm thinking Canva is going to IPO in the US, or that's the talk, at a $60 billion valuation. We've had Atlassian going offshore. So if we can't keep the winners here, what do we end up with?
Mediocrity. And that's what the Australian share market is. It's full of mediocrity. And the mediocrity well on display in Canberra, at the productivity. I just think the whole place is mediocre.
Yeah.
I don't want to get too down on it, but I was at a board yesterday on an operating company, and we're talking about the Aussie dollar, which is clearly undervalued. But if you're a foreigner looking at what's going on in Canberra and the output, which is virtually zero, if the Australian dollar is a valuation or an assessment by international markets on the value of the Australian economy, the Australian dollar properly reflects our outlook, on the lack of leadership and the lack of a plan. So I don't want to, as I've always said, I think the Aussie dollar is undervalued, but, we've got industry funds sitting around a round table who are virtually saying we can't invest in Australia. We've got way too much money to invest. There's nothing coming out of this round table for us to invest in. There's no dynamic plan. So we continue to invest offshore, and the more they do, they sell the Aussie dollar, and the Aussie dollar gets sold down. And Australia's a great importer of consumer goods, and so we pay more for consumer goods on a weak currency. So then we get a wages push. The AC2 sits there, workers need more money to survive, so we want wages going up. And the discussion about productivity just falls between the cracks.
There clearly is a deal to be done. Australia's, resource rich. We've got all sorts of minerals and metals and rare earths. And China's weaponizing those things in its trade policy. We should be doing some sort of deal with the US where we can supply and refine, these various minerals that are crucial for them, and get something in return. That seems the obvious deal to be done.
Well, BHP and Rio's and Fortescue's executives, I think, are in Washington now talking to the President of America regarding a major copper development, one of the biggest copper mines in the world. And they're having environmental issues. But that says it all. Look, the great thing is that if we are investing through our industrial, our resources base, to develop mines which will be owned by Australian equity, that's a good result, no matter where those mines are developed and those resources developed. How the industry funds play a role, is to be seen. And the fix, we've got to acknowledge what we've done wrong before we can fix it and develop a strategy going forward. Now, we've developed a massive LNG export industry, which is 80% plus owned by foreigners. No one thought at the time that Australia was accumulating massive capital through the superannuation system, and therefore they should be an equity owner in those resource developments and export industries, plus, ensuring that supply comes back to Australia at a reasonably good price to ensure that our economy has cheap energy so it can propel forward productively. So we've made a massive mistake over the last 15 years. Best if everyone admitted it was bad policy, then work out whether you can fix it, and then going forward saying it'll never happen again. Australia does not need to rely on excessive capital provided by foreign resource companies, So it is a big picture. Acknowledge the mistakes, fix up those mistakes where possible, have a policy for investment in this country and Australian ownership, and have a logical approach to an economic policy which ensures Australia's growth and cheap energy.
Yeah. Let's talk a little bit about central banks. Our neighbours in New Zealand did lower the overnight cash rate, as they call it, from 3.25% down to 3%. And in fact, their board, which votes on these matters, was split 4-2 because two members wanted to drop rates by 50 basis points. So they're looking very dovish. Is there a relationship or correlation between what happens in Australia and what happens in New Zealand in terms of monetary policy?
Well, look, I usually admire the New Zealanders in terms of their politics and their financial regulation. They seem to have had it over Australia. But when they lifted interest rates aggressively, 3 years ago and pushed their economy into recession, it was plain dumb. And how they got the consequences, they're trying to get the economy going again. Interest rate cuts may help, but, I guess a lot of capital was sitting on the sideline in New Zealand. I presume during the recession, a lot of capital exited, and smart people exited with their money. That's what happens when you create a recession, which you didn't need to have. What New Zealand suffered from was excessive housing price speculation. And they've learnt the hard lesson. They would have been better off regulating the housing market rather than whacking up interest rates and causing a recession. So you say, is there parallel? I hope we've learnt from that. The housing problem is not about the cost of money, so to speak. It's the level of debt and the excesses of, I guess, allowing foreign ownership. And New Zealand had excessive foreign ownership in its housing market and excessive speculation. And they wore the consequences with a poor policy response. So,
yeah. John, there was some good news during the week, which was the consumer sentiment index out from Westpac showed a pretty good jump. So the consumer is getting back to a kind of neutral level. Is that what you're seeing? I know that you're involved in some small business interests and so on. So you do have your nose to the ground.
Yeah, there's a bit of uplift in consumer activity. I think, as I said earlier, it's off the bottom. I guess this is what happens when you immigrate 1 million people over a couple of years. Eventually they do find themselves into the consuming market and into the retail sales. So I think we're getting a bit of that delayed. And maybe there's been a confidence lift with interest rate cuts, and some small wage increases coming through Fair Work. It's all building up. I'm looking at some of the reports, and I think the retailers are saying that July and August sales are reasonable. They've lifted. They wouldn't have said that 6 months ago, that we're looking at flatlining, if not declining in some aspects of the economy. So we are seeing, and I think that's what the market's grabbing on. So some quite good numbers from super cheap, what appear to be good numbers this morning, above market expectations. So we'll see how the market reacts to that today. I know the dogs are barking again. We need to get this dog on camera because every time he's obviously got a view, we need to hear it. We need to hear it.
Poor Miles can't wait to get out, even though it's pouring with rain here. But anyway, we'll cut that segment.
No, I think it was good. No, Paul, talk about productivity and rain. I just got off the ferry this morning, walked up to the office, it's about 4 blocks, and I say 50% of my walk was not covered. It's not covered. So you're just walking through the rain. People are ducking and weaving with umbrellas. And I sort of think to myself, in terms of councils, we are so keen to build, runways for bicycles, and no one cares about the person going to work, whether he can walk up the street without getting splashed or blown or wet. And I just thought to myself, again, it all goes to productivity and thought process in this country, and that's a very small example. If you can say to people you can work from home, they'll look out the window and go, well, do I really want to go to work, get on a train, will be delayed, walk down the street, get blown away and wet, get to work and be sodden, and then have to do the whole exercise again going, I think I'll stay home today. Yeah, if we're going to have a balance between working from home and working, make it comfortable for people to get to work, And the council, and particularly the Sydney City Council, when you walk around the city and the amount of the pavements which aren't covered, and it's open to, in summer, blaring sun, in winter, wind and rain, and I think to myself, what do these people do at the town hall,
Well, John, we might conclude it there. Always interesting and lots to talk about. Thanks for listening, and we'll get back to you next week.
I want to hear that dog next week. I want to hear what he says.